Imagine a customer opening a bank account from their sofa and signing the contract with a signature as strong as ink, valid across Europe. In this course, you'll learn how to design that eIDAS compliant solution step by step. We'll move through 4 stages. First, you'll learn the core concepts of digital identity and eIDAS. Then we anchor everything in a concrete banking use case. Next, we design the technical and evidence architecture. Finally, you'll assemble a clear end-to-end solution description. Throughout the course, we'll stay grounded in one banking scenario: remote onboarding with a qualified electronic signature. We'll work in 3 layers. First, we build a shared vocabulary around identity, credentials, and trust. Then we apply that to business and UX requirements, regulations, risk, and user flows for opening an account. Finally, we translate those requirements into technical architecture: components, APIs, evidence handling, and signature services that could actually run in a bank. You can approach this course in 2 ways. If you're new to digital identity, follow the full path and let this module build your vocabulary. If you're already comfortable with identity basics, skim this part and focus your time on the banking scenario and technical architecture. Before we architect anything for eIDAS, we need a shared language. Digital identity is simply information that uniquely represents a person or organization online. On top of that, we'll add attributes, credentials, authentication, and authorization. In this module, we'll unpack each term with concrete examples so you can see how they work together to create online trust. When we move from a passport to a digital identity, we're not copying the document itself. We're translating the important facts about a person into data points that systems can understand and link together. Under eIDAS, this digital profile isn't just for logging in. It must be trustworthy enough to support legally binding actions, like signing a contract. Attributes are the individual data points that describe a person in digital form. Some tell us who you are, like your name or national ID. Others describe how to reach you, like email or address. Status attributes express decisions about you, such as KYC completed or risk level. In banking, these verified attributes drive critical decisions and approvals. Now let's bundle those attributes. Think of a credential as a trusted box that carries your key attributes together. Instead of sending name, date of birth, and ID number separately, a reliable organization packages them and vouches for them. That seal of trust is what services rely on. Digital certificates or bank logins are practical examples of such trusted containers. A claim is simply a verified statement about someone. You can read it as, "This specific person has this specific attribute, confirmed by this specific issuer." Technically, these travel as signed tokens or assertions, but conceptually it's just trusted data. In our bank use case, decisions like, "Can we open this account?" are driven by these verified claims. Authentication answers one key question: are you really who you claim to be? Systems check this using 3 types of factors. Something you know, like a password or PIN. Something you have, like a phone or token. And something you are, like a fingerprint or face. Under eIDAS, higher assurance usually means combining at least 2 of these. Once a user is authenticated, authorization decides what they're actually allowed to do. Think of it as an access gate that evaluates attributes and roles: retail customer, commercial officer, approver, and so on. The same person might be allowed to view their own accounts, but completely blocked from approving a commercial mortgage. In our eIDAS banking scenario, these rules govern high-risk actions like starting onboarding steps or executing a qualified electronic signature. Digital identity always revolves around 3 key parties. First, the subject, our customer who wants to open the bank account and sign the contract. Second, the identity provider. It authenticates the customer and issues trusted information about them, like verified name or ID number. Third, the relying party, here the bank. It consumes those verified attributes to decide whether to create the account and what access to grant. When we connect a bank with an identity provider and a trust service, technology alone is not enough. Legal trust is the contract and regulation layer. eIDAS, national laws, and liability rules if something goes wrong. Technical trust is the cryptography layer. Certificates, signatures, secure channels. Operational trust is the do they actually run it well layer. Audits, certifications, incident handling. Qualified signing only works when all three are in place and aligned. This flow is the core pattern behind our whole solution. The user trusts the bank with a goal: open an account. The bank does not identify the user itself. It outsources that to an eIDAS-compatible identity provider. The IDP authenticates the user, applies its assurance level, and returns signed claims. The bank then bases its onboarding decision entirely on those claims. Everything else we add is just hardening and scaling this basic loop. You now have the core language of digital identity. Data as attributes, bundled into credentials, exchanged as claims, controlled by authentication and authorization. You've also seen the basic ecosystem of user, bank, and identity provider, all relying on trust. Next, we'll connect this to eIDAS and formal EU trust services.